Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today I'm coming at you with a special Friday episode recapping Canopy Growth and Cronos Group's two Canadian licensed producers' recent earnings. So before we jump in, if you enjoyed this video or you learned something, please just leave a like on it as it really helps out my channel. And of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos, and there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so you can watch episodes over time to learn about the evolution of the industry, and then you can identify top companies that you keep seeing pop up and take advantage whenever you're ready. So we're going to start though. Just want to let you guys know that I'm not a financial advisor. I'm a self-taught investor, so this is not advice, but what I want to do is just strictly take a look at the numbers and see what the real story is telling us, and see whether these two Canadian LPs that are overvalued and underperforming, to see whether they're increasing their revenues and their earnings, which are their profits, and if they are decreasing the amount of cash burn or cash that they're losing. So just wanted to recap that because it's so important, especially when we compare LPs to other LPs. But when we compare LPs to MSOs, when we're going to see their earnings next week, you're going to see that it's night and day. The Canadian LPs are overvalued and underproducing compared to the MSOs, which again are undervalued and really overproducing. We're going to see that. But let's just see what Canopy Growth reports their first quarter fiscal 2022 financial results. We're just going to look at the highlights. This is the one part that I'm actually going to read through because this is what Canopy says, okay, well, based on everything that happened, this is what we should tell investors about. So they've achieved a 23% revenue growth in Q1 2020 versus Q1 2021, driven by strong double-digit growth in both cannabis and other consumer product businesses. They maintain number one market share in tracked Canadian recreational cannabis market amid a highly competitive landscape, and I'm pretty sure this one is saying based on their data, and so it's like data they're collecting themselves, so it's easy to say you're number one when you're collecting the data. Completing acquisition of Ace Valley and Supreme Cannabis with commercial and operational integration progressing smoothly, led by consumer insights, a robust innovation pipeline with over 100 plus SKUs across key product categories set to hit shelves between Q2 2022 and Q4 2022, momentum with cannabis reform increasing as the company continues to build its U.S. presence through broad portfolio of innovative CBD and CPG brands, and they remain committed to accelerating top-line growth in the second half of fiscal 2022 and achieving positive adjusted EBITDA by the end of fiscal 2022. Okay, fair enough. It's going to take them that long to get positive adjusted EBITDA, just positive. But nonetheless, what do the numbers say? This is for Q1. This is just their last quarter. They managed to bring in net revenue of 136.2, which is up 23% from Q1 2020, a full year ago. Not just last quarter, a full year. So gross margin percentage, 20%. Not very good for gross margin, especially compared to MSOs. Adjusted gross margin percentage, 21%. Now, net income loss for just this quarter, $390 million for one quarter alone. Up 404%. Adjusted EBITDA, a loss of 63.6, so that's earnings before interest, taxes, depreciation, amortization, negative 63.6 million. 31% increase, so that's 31% better than last year. And then free cash flow, loss of 186.1 million, down 3% from last year. So that's technically an improvement. Now again, just wanted to highlight this one here. The asterisk, unless otherwise indicated, market share data disclosed in this press release is calculated using the company's internal proprietary market share tool that utilizes, so yeah, it's their own sort of math that gets them there, so obviously they can say that because they're using their own tool. But let's just look at the numbers then. If we look at revenue by channel, first quarter fiscal 2022 revenue number, Canadian recreational cannabis business to business did increase, and again, they're not even comparing Q1 to Q4 of 2021, they're comparing year over year. So it's not like this is quarter over quarter growth, this is year over year growth. Business to business, 42.7 million, up from 34.9 million, 22% year over year. Yikes. Compared to US MSOs, not very fast growth. Business to consumer, 17.3 million, up from 9.4 million, 84% year over year. That's one of their biggest improvements, which is good to see. But so that brings their total Canadian recreational cannabis sales for this first quarter, 60 million, up from 44.3 million, which is again Q1 2021, one full year ago. So sales are up 35% in cannabis, which is good. Their Canadian medical cannabis, though, 13.5 million, dropped from 13.9 million for a decrease of 3%. So in total, their entire Canadian cannabis sales for this quarter was 73.5, up from 58.2. So without a doubt, they've grown 26% from last year. It does seem like they are bringing in the most revenue combined, a little bit more than TLRY. But I just wanted to add, we saw TLRY's recent earnings, and they did Q4 and their full fiscal year. And in their full fiscal year, they lost net income of $330 million, but in their Q4, they had a positive net income. So if we just compare that to Canopy in just one quarter alone, lost $390 million. So it just goes to show how much ahead Tilray is really of Canopy fundamentally, I think. And I mean, from all of the public data that we can see, Canopy's not number one with the most market share. So just it's important to be able to look at these different things and come to our own conclusions. But nonetheless, I'll keep going. International and other C3, this revenue, which they paid hundreds of millions for, and then I remember they ended up selling one of their facilities recently because they can't use it. They paid hundreds of millions for this company, yet in this quarter they just brought in 11.4 million, down from 15.4, so negative, that's down by 26%. And then other, we don't know what other is, 8 million up from 5.7, so that's a 40% increase in the other category. Global cannabis net revenue then up to 92.9, up from 79.3. So again, 17% growth year over year for global cannabis is okay compared to, or just when you look at the global context and how slowly things are moving, that's all right. But again, year-over-year growth, not ideal. But their other consumer products, Storz and Bickel, This Works, BioSteel, this is where they're seeing most of their improvements, which is good for them to see. And it just goes to show that it's good that they're getting into the CPG and the CBD space, because this is clearly going to help them. Storz and Bickel up 24.1 million, up from 17.1 million, 41% year over year. This Works, 6.5 million, up from 6.1, just a 7% increase year over year, so not that great. A lot of work needs to be done there. BioSteel, 6.7 million, up from 2.4, 179% increase year over year in just the quarter. And then other consumer products, 6 up from 5.59%. So if we look in total, their net revenue 136.2, up from 110.4, 23% growth year over year. That is why I'm not invested in Canopy. And then if we just look at their revenue by form, dry bud, 66 million, up from 40.1 million, 65% year over year. So they're definitely increasing their market share, and it's possible they will become the number one market share leader in Canada if they keep this up. So that's good to see, at least for Canopy. Oils and soft gels, 5.7 million, down from 7.7 million. So that they lost market share in oils and soft gels by 26%. That's not good. Beverages, edibles, topicals, and vapes. What Canopy invested hundreds of millions into beverages, 9.1 million in sales, up from 7.1. Now again, it's not Canopy's fault. Canada's regulations is very bad for beverages. You can't buy more than 5 at a time, whereas you can buy as much alcohol as you possibly want, which is ridiculous. But that was an increase of 28% year over year, so it's good to see that growing. But when you spend hundreds of millions to create beverages from scratch, and this is the return you get, not ideal. So it's just bad return on investment. Ultimately, though, for Q1 2022, they brought in 60 million, up from 44.3 million, again, from the Canadian recreational cannabis. And that's that 35% growth. While their medical, though, this was one that we saw decrease. Their dry bud, 9.6 to 10.8. Seems like Canadian patients are going elsewhere to get their medical cannabis, because this went down year over year. That's not ideal. Oils and soft gels also went down year over year. So it's just, when your product's not good, people aren't going to buy, or they're going to switch and go elsewhere, making their total cannabis global net revenue 92.9 million, up from 79.3 million. So year over year, 17% increase. And as we can see, though, if they didn't make that dry bud move and make improvements there, they would be suffering a lot more. So it's good that they did that in time, but nonetheless, that is the breakdown. So I really just wanted to focus on that. Everything else, I mean, you can walk through them, but for me, I just want to look at the numbers and see, are they increasing revenues and profits, and are they decreasing costs? And Canopy, they are increasing their revenues and profits, and they are decreasing their costs, but they're just spending a lot more money, burning a lot more cash than they're actually making in revenue and earning. So that's pretty much it for Canopy. If you wanted more, obviously you can grab the link and you can read through yourself, but I haven't been able to. I have a busy day, so just wanted to go through the numbers. Hopefully that was a good enough explanation. And then Cronos Group reports 2021 second quarter results. So let's look at the breakdown of their sales, but what did they want to highlight to investors? 3 things. Amended agreement with Ginkgo Bioworks to accelerate commercialization of cultured cannabinoids. Announced strategic investment with Pharmacann, a leading US cannabis company. So it appears Cronos has made a move to acquire an option to acquire 10% of Pharmacann, which is a US MSO. They're a private US MSO, but just wanted to add that in there. So at least they have made their move into the US, like Canopy has already made that deal with TerraSend and Acreage, or with Acreage mostly, and then they'll own a piece of TerraSend, versus Tilray saying that they want to go shopping. Clearly, these LPs want to buy MSOs, because MSOs are what's going to make them closer to profitability sooner than later. And then lastly, Spinach launched new products in the edible, concentrate, and flower categories in Canada. So nothing to show here for their growth or sales or anything, but let's just take a look at the numbers. So if we scroll down, we can see they have their financial results here. 3 months ended June 30th, so looking at 3 months of revenue, and then 6 months ended, comparing that to 6 months of revenue. Strange, but okay. Net revenue from the US, 2.2 million, up from 2.1 a year ago, so 2% growth year over year. Not ideal. And if we look at it 6 months, over 6 month span as opposed to 3 months, 4.6 up from 4.37%. Still not great. Mind you, most of their growth from Cronos is coming from the rest of the world. So it seems like Cronos actually is doing a good deal of medical cannabis globally elsewhere. So that's good to see. 13.3 million up from 7.7 million. So 74% year over year growth. Obviously, as they are in certain markets, I think Israel's their biggest one, but as that is getting more popular, that is a good sign of what's to come once more countries do loosen up their regulations. If we look at it for 6 months, 23.5 million, up from 13.9 million, 69% increase. So that is nice to see with a consolidated net revenue. So total 15.6 million, up from 9.8 million, for a change of 58% year over year. Which is a nice improvement, but it shows that Cronos isn't a fast-growing cannabis company like others, but they don't need to be because Daddy TLRY is behind them with a ton of cash. As we'll see in a moment, much like Canopy Growth has Constellation Brands behind them with a ton of cash too. So when you have that backer, it allows you to experiment a little bit more, but main thing that the backers want to see is that they're cutting costs too. While their gross loss, Cronos, saw 15.7 million, up from the same time last year, 2.92. This is quite a bit of an increase. So their gross loss increased by 440%, but it's just because it went from 2 million to 15 million. So it's not like they're losing as much as Canopy Growth. It's not 300 million or anything like that. And if we look at their adjusted EBITDA, 49.7 million, up from 26.9 million, which is an 84% increase. So they're losing more money, but not nearly as much money as Canopy. And the main thing is we can see here cash and cash equivalents from the 2 billion Canadian that TLRY invested a few years back. They've got 895 million versus what they had last year, 1.1 billion. So in this quarter, well, year over year, from last quarter to this quarter, it seems like they did end up spending 214 million. So did they see a return on investment in this revenue? Not even close. But in time, maybe there will be. That's also just a reason why I'm not invested in Cronos. So I did just want to highlight the increase year over year was primarily driven by continued growth in the adult use Canadian cannabis market and increased sales in the Israeli medical cannabis market. So that seems where most of their international sales are coming from. And then just some details on their transaction. Cronos Group announced a strategic investment in Pharmacann to acquire approximately 10.5% ownership stake in Pharmacann on a fully diluted basis for a total consideration of 110 million. So they're willing to pay 110 million to get a 10% ownership in a US MSO. That's clearly how much better shape these US MSOs are than some of the Canadian LPs. Pharmacann has a broad geographic footprint in the US and has built an efficient, effective, and scalable model operation, including 6 production facilities and 24 dispensaries operating under Verilife. So clearly it almost seems like TLRY is like, yeah, you guys got to get into the US and buy some of these MSOs because we want to make a return on our investment sooner than later. But then let's go down and just see the breakdown of the revenue. So from the rest of the world, cannabis flower 11.5 up from 5.6. So this is likely where we see the impact from the sales in Israel, as they highlight that again down here. Cannabis extracts 1.5 down from 1.9. So their cannabis extract sales actually decreased 20%. Although their flower went up 104%, so that obviously offsets the decrease. And then other, 267,000 up from 118,000, 126%. So net revenue from the rest of the world, that's where the 13.3 million comes from, up 7.7 million for increase of 74%. But again, that gross loss margin, if we're just looking at the rest of the world, 16 million up from 3.5. So this makes up a big portion of that 440% increase. Adjusted EBITDA, again, just negative numbers. And then if we look at their US numbers, it shows their net revenue. We saw this before, 2.2 million up from 2.1. So, good point. So their rest of the world results, Canada, obviously, and Israel is just in the rest of the world, whereas they're breaking up rest of the world and then US sales. And they did manage a gross profit in the US, 644,000 up from 587,000, 10% increase, but a loss in adjusted EBITDA too. So if we look at the numbers, again, it just goes to show that they are, they're making a little bit more revenue. They're losing less, but all in all, they are still losing way more money than any of the US MSOs, and even comparably to TLRY. And so that's just why I did want to show you, again, highlighting, if you saw my Sunday video, there was another mention of TLRY, that it seems like investment firms are pretty bullish on them compared to other Canadian LPs. Well, this is another one from Jeffries. TLRY top pick in Canada, price target increased to $27 based on $27 US based on strong upside potential in the next 12 months and aggressive near-term moves into US THC. So again, if you did want to venture into any Canadian LPs and consider trading them because they're on the major US exchanges, therefore you can actually, there's more volume, there's enough opportunity to actually trade them successfully where there's not the volume on the OTC or the Canadian Securities Exchange, so you just can't do that with MSOs. Then TLRY is again likely the best choice based on the fundamental numbers. This is not advice though, that's just what I'm trying to show you from my video of TLRY last week, which you can grab the link in the description below, and then the walkthrough of these recent numbers here. So you can check this out If you wanted to read, you can pause and do that, or you can grab the link for this below. So just wanted to show you that if you wanted to read it. And then we're going to jump over to Todd Harrison. Thank you, Todd, for providing this because it's true. Canopy Growth is trying to buy a US MSO. TLRY is trying to buy a US MSO. Institutions are trying to buy US MSOs, while many other on Twitter complain they own US MSOs. So these are just obviously impatient investors here that he's talking about. But this is a very good point. This is why all these companies want to buy MSOs, because MSOs are where the value is. And that's why if you're a self-direct investor, it's wise to start accumulating right now, because this is the best value we've seen since January to get in at these MSOs at these prices. So just going to read this. US multiple routes to mark upon federal permissibility of US THC market already exists for the company, including immediate path through planned acquisition of Acreage Holdings and conditional ownership of TerraSense, which provides further optionality to increase presence. Leveraging the balance sheet strength, the company is actively seeking legally permitted investments in THC businesses brands to increase exposure to US THC market in advance of federal permissibility. So this likely came from the press release from Canopy, but I have a busy day and I just wanted to bring you the numbers. Unfortunately, I just didn't have time to read through it all, so hope you understand. But this is good to hear. So again, it just highlights the fact that every Canadian LP wants to get into the MSOs because they know that they can buy cheap value and get closer to profitability sooner than later when they do that. So just wanted to show you one of the best resources out there, mjstocktrader.com. But FYI, this list does have Canadian LPs and US MSOs. So it's just worth noting, but obviously don't invest in a company if you don't know if it's an MSO or an LP. You have to do that research first. But just wanted to use this as an example to show you Canopy Growth. Their market cap, let's just say as of today, was 6.9 billion. Let's compare them to Curaleaf, 8.2 billion. Last quarter, Canopy brought in 123. We just saw they did about 136. Curaleaf last quarter did 260. They're anticipating to bring in over 300 million this upcoming quarter on Monday. So for the full year, Curaleaf's expected to do over $1 billion, whereas Canopy this full year is expected to do under 500 million. Yet, you can buy shares for Canopy Growth valued at 6.9 billion, or about 7 billion, or you can buy shares of Curaleaf valued at 8.2 billion. And for your money to double, then Canopy's market cap has to double from 7 to 14, or Curaleaf's has to go from 8.2 to 16.4. And again, with these sales, the odds of Curaleaf doubling is a lot sooner than Canopy Growth. Now, that is just a breakdown of looking at the market cap and then comparing the numbers and just showing that Canopy is more overvalued. The main thing, though, we know Curaleaf trades on the OTC and the CSE, meaning most investors do not have access to them, or they're waiting on some safe harbor language that will allow them to invest without fear of federal prosecution. But again, if we just compare this to some other LPs, Trulieve and Cresco Labs, valued at 4.6 billion or 4.3 billion. Last quarter, they brought in 194 million or 178 million, and they're on pace to do 775 million or 714 million. But 2022 revenue numbers, 1.2 billion. Yet they're sitting way below Canopy's market cap at 4.6 and 4.3. So you can literally buy Trulieve or Cresco, which are fundamentally way healthier, making way more money, on pace to make double of what Canopy's making, and you can buy them for about 70% of the price. So hopefully that wasn't too confusing, as this is kind of on the go. Let me know if you have any questions below, but that is me trying to show you that why market cap and the fundamentals are really what matters, because in the short term, the market is a voting machine, but in the long term, it is always a weighing machine, and smart investors will always find their way into the right companies, and as we've seen MSO share prices falling, it seems like this is time for them to enter, especially when we're seeing Canadian LPs put out their earnings showing that their price is too high based on the fundamentals that they're doing. Wouldn't be surprised if capital that's in any of those Canadian LPs really wants to get into the MSOs, and that's why we might see some sort of push for SAFE in the second half of this year. But that is it for today's episode, folks. I want to thank you so much for tuning in, and I really hope you got some value out of it. What did you think about the LP earnings? Let me know in the comments if you have any questions or concerns, or just let me know what you think so that I can answer and we can have a discussion. But besides that, if you enjoyed this video, please leave a thumbs up, subscribe if you don't want to miss any more, and I will catch you on Sunday for This Week in Cannabis News. Have a great Friday, everybody.